Hey everyone, welcome in to another daily editorial here on the KE Report, chatting with Brian Leni, editor of the Junior Stock Review. We're going to be focusing on the resource markets, the metals markets broadly, talking precious metals, which continue to perform quite nicely, and going down into some of the base metals, maybe some other metals that seem to have been not forgotten, but people seem to be, at least in my eyes, a little bit more distracted by precious metals. It's something that we've seen before, but hey, we're going to get Brian's opinion on all of this. I'll post a link to the Junior Stock Review website in the show notes. But Brian, what's your thought on the overall environment for the metals markets here, with precious metals doing well, and how much money that can concentrate and leave some of these other metals, even ones as big as copper, kind of in a forgotten mode? Not that copper's doing poorly, but copper's definitely on a different trend, at least over the last couple of months, compared to the precious metals.
Well, thanks for having me, Corey. I think precious metals obviously has done really well, especially when you look at just the metals themselves outside of the equities. We've seen a move from 1800-ish per ounce up to 2400 plus, and in the span of 6 to 8 months. And it's a great whirlwind. I think the factors that are pushing precious metals higher, in particular gold, I think are those overarching factors that are really set to be the biggest issues, probably the global financial market moving forward, and thus why you're seeing the price be so strong. Whether it's central bank buying, Asian investors, and maybe even the start of the North American investors coming back into the bullion. That support, I think, is going to be there. On the equity side, we've definitely seen a reversal in sentiment. I could talk specifically about Junior Stock Review Premium Portfolio. We've seen two companies with 200% gains in the last, again, 6 to 8 months: G Mining, Montage, and then a little bit lower down on the return scale, Kenora Land and Aber, both around 100%. So in selected equities, while generally the equities have lagged the metal prices, if you're in the right names, you've made a lot of money in Q2. And while we've seen the equities kind of cool off over the last, let's say, month or so, I think the action that we've seen in the last couple of weeks have been really good. And obviously, overarching the macro versus the other metals such as copper, nickel, cobalt, even the energy metals, I think that precious metals is definitely where investors are going to be because of those overarching issues, and it clouds, I think, some of the view on those other markets.
Yeah, Brian, and we've seen that before, where generally the lion's share of any conference or any show is really precious metals focus, even though there is copper and nickel and uranium and zinc and lithium and all these other metals. You've always mentioned to us and on the show that you're kind of agnostic as far as what the metals price is doing, because you're really looking at the company, the management teams, you're looking for value creation. And you've looked at everything in any of these metals, but also even in oil and gas, just looking for opportunities. And it's, to your point, there has been some really good outperformers in people's portfolios if they picked correctly, but it hasn't been a rising tide lifting all boats environment for any of these metals. So maybe just speak to some of the things that you do in Junior Stock Review to really cherry pick the growth or the alpha or the companies that are going to outperform, and what you try to avoid, because it's really a rifle approach right now, not a shotgun approach.
Right. And stock picking is a skill. And that's something that my experience and education have really driven me to the process that I use to pick companies. And it's the blended analysis of everything that goes into a junior that really highlights which companies I think are going to do well and which ones aren't. Nobody shoots 100% on these things. You can be right and you can be wrong, especially on the exploration side, where you can pick the right people that have money, that have the right projects, and they can miss and you lose money. I tend to focus on the developers that have existing resources that are looking to expand it. And obviously I look for those people that have the skill set to execute and sell their story to the market. Looking at a story like G Mining, I think it's a really good one, because G Mining was a pick that I made in the heart of this bear market we had 2 years prior. And there still wasn't a lot of interest in it. And I can remember buying that stock, and that was a pure people play that was built on the back of the Gignac family and what I could see in terms of, to me, was probable success. And they took probably a marginal deposit or project in Tocantinzinho and have now done their first gold pour a week ago. And you've seen the market attribute value to them very quickly once they basically hit about six months out from their first gold pour, which is the beginning of the year. The share price started to really move. And not only that, over the last couple of months, we see them step out and they go and buy Reunion Gold, which is a great sizable gold deposit in Guyana. It's going to have its own issues and risks to it. But you're seeing what's happening is G Mining is becoming the next mid-tier producer in the sector. And to me, it was an obvious thing to see, yet I think you had to have the courage to put that money out when the sector was poor. And I think that's part of the other side to this thing, is not only identifying value, but also having the courage to participate and put your money where your mouth is. And so often we look at today, and a lot of investors want to look and use the past as prologue and those experiences of where good news was sold, and they project that forward. And I think while that could still be the case in, let's say, the next 3 to 6 months, I really think we're on the cusp of this thing really moving. And that consolidation we saw over the last month and a half, I think, is the springboard for what's going to come next. And as soon as more people get back from holiday, hopefully that happens.
Hey, I give you credit, Brian. You were telling us about G Mining, really, I think, before anybody else was. And they have gone ahead and built that asset seemingly quite smoothly, which is impressive. Now that we are in a better environment, what do you look at in these development plays? Because, man, oh man, it feels like half the companies out there are development plays right now, with a resource, with some sort of economics, going through permitting, but wondering where that cash is going to come from to build it, if they can even build it. How do you go about analyzing which of these development plays are higher quality?
Right. Well, it's both higher quality, and I think you want to look for stories that are misunderstood or are being ignored by the market. And I just actually, my last new pick in Junior Stock Review Premium was a developer. And I think the basis of investment in it is that they're going to expand the scope of the deposits that are going to be included in their economic model. And I think the market is completely missing this. And for me, from the analysis that I did in the DCF, I see more than a double conservatively from this point on. And then if you're talking about a gold price rising in the meantime, I think that this company in particular should see a lot of share price appreciation as the market catches up to it. So I think if you can find stories that are still being ignored, and they're out there, I'm telling you, they're 100% still out there, then you have opportunity there. But you have to understand the value proposition. You obviously have to be able to put that thesis together and put a price on it, and then be able to answer why the market's going to recognize it. So in this particular company's case, which I won't share now, but maybe we'll talk about it next month, is they're going to redo their PEA, and they're going to, on the back of that, they're also doing some exploration drilling, which looks highly likely that they're going to be able to expand that deposit and add more ounces to the bottom line. And given that it's in a safe jurisdiction, I think that they are going to get recognition. And I would suspect that they should probably be able to attract some interest from a senior miner to take a strategic position. And again, that's another point I think you can add to your list of X factors that investors can look for, that can, add to the bottom line value of the company. And senior miners are going to be looking to add to their coffers. They're in an industry which unfortunately depletes their main asset every year. And we've gone many years now without really, I would call major M&A happening. And in particular with the gold sector, I think if you can identify, and there's not a lot of them, especially if you make your criteria pretty tight, but if you start going with size, where it's located, that average annual production, if you start going 100,000, 150,000 ounces in good jurisdictions, it really narrows down the scope of the companies you can look at, which makes it a lot easier to recognize. And then in a few cases, you can find the companies that nobody's looked at yet. And I think that makes all the difference.
Well, Brian, I think you hit the nail on the head here with an idea for looking at overlooked stories, underloved stories where people are extrapolating the past out into the future and maybe missing the value arbitrage and the risk reward setup. I'll bring up a company that I know we've discussed on the show before that's been in your portfolio for a long time, so it's not a new pick, but I think it's a good example of this, Abra Silver. You're the first ones that ever told us about it. We've had you on the show talking about Abra Silver. We eventually got in touch with them a couple of years ago, and I've been bringing them on the show. And I think a lot of people looked at that occulto deposit they have as just this old stale deposit, and they were missing the forest for the trees when they found this new Jack zone. And then now they found Jack North and some other Phantasma, Alpaca, some other targets. You were on the story before anybody. And we talked about it even off mic, where I think a lot of the market's asleep. And then recently the market woke up and started realizing what was happening when they saw the resources, when they saw the deal with Kinross. Maybe use that as a case study to bring in some of these points you do in Junior Stock Review of seeing it early before everybody else does.
Right. Oh, thanks for that, Chad. Yeah, AbraSilver is probably the prime example. That's the biggest return I've ever had. I think it's sitting around, basically a 20 bagger for me, plus or minus a couple 100% there. But it was a major turner. And I bought that at basically 3 cents. And that was in a market, if you recall, it was in 2019 fall-ish, maybe Q3, Q4. I forget exactly when I bought it. But it was a company that had an existing resource, an oxide resource, and it was a change in management. If you recall, Altius Minerals, which was an Altius incubated company, Atheon had kind of failed in their business model, and there's a few reasons why that happened. But what they did is they joined with AbraSilver, and I was very familiar with the management team, John Miniotis being the centerpiece of that existing resource with expandability, oxide at that, which is again on the better side of the economic curve. The big question mark, and I think why a lot of people ignored it, was because it was in Argentina, in particular Salta. But again, that's something that I was comfortable with. I was comfortable with Salta. I was comfortable with the resource they had and projecting that out to where I thought it could be. And by 3 cents, I forget what the market cap was back then, but it's a fraction of what it was today. And to me, the risk to reward was that asymmetric type of situation that you want to be in, regardless of people being apprehensive, probably rightly, about Argentina. And I put my money where my mouth was, and I bought into it. And of course, the management team is executed, which is the needed part in any of these investments. You need management. You need good management to execute. You can have good projects, but I don't know, I'm sure both you and Corey can confirm what I'm going to say here, is that if you've got bad management teams, they can screw these projects up so quickly, whether it's how they raise money, the way that they explore, and you can evaporate all that value very quickly. So I made a good decision early, and it had good risk to reward. And I did it when at a time in the market when people didn't care, and management is executed, and it's been a wonderful story since then. And I think it only gets better in the future. But so many times that's the story that goes along with it, is putting money out there when nobody else will. And I think really for investors listening, this is that moment where, it looks like we're on the precipice of a real bull market here, and it can bring you tremendous returns if you pick right.
So how do you isolate where investors don't care? It's easy to look at the share price and see if a share price hasn't gone anywhere, but that's still a wide range of companies. You need to filter through a lot of companies. So what stands out to you then in terms of these companies that are unloved or aren't getting any attention when there's a lot of them to choose from?
Right. Well, I think it comes down to the criteria that you use to narrow down your list. And you need this criteria. So you can start with, it gets pretty easy if you say jurisdiction. Well, if you don't want to take any chances in terms of and I can't say take any chances. Jurisdictional risk is ubiquitous. You can have it anywhere. But obviously there's some places that are worse than others. And so I would say if you're really risk adverse in terms of jurisdiction, you cut out probably South America and Africa. And therefore you're basically left with Canada and the States and maybe some of the good places in Europe. And so if you start there, you've just narrowed down your list. And then you say, okay, well, I'm looking for at least a resource of, let's use silver as an example, 50 million ounces or 25 million ounces with the ability to maybe double their resource or such in the next year. And then again, you narrow that list down once again. And then you say, okay, well, I need a management team that has done this exact thing before in the jurisdiction that the project's located. Okay, well, you've probably narrowed your list down even more. So you probably started at with 3,000 companies. You said, I can only do Canada, the States, and good parts of Europe. You're probably down to, let's say, 400 or 500 companies. And then you say 20 million or 50 million ounces of silver in situ. And then you've probably narrowed your list down to half that. So now you're only down to, let's say, 100 companies. And 100 companies is a lot different than 3,000. And you can keep on adding that criteria, make it very easy and quick for yourself right off the hop. And so you can go to a web page, you can look at the existing resource table and really cut it back. And that's how I suggest you do it. And you get down to, let's say, 30 companies. Well, I know everybody's not doing this as a full-time job like myself, but 30 companies to examine over the next, let's say, 6 months is much more manageable than 300, than 600. So that's how I would start on that end. And then the other side to it is I've got criteria myself, and the process never stops for me. I am agnostic to the metal, which means at all times I'm always looking to see if I can find something that's cheap. And then cheap, but I also want to see that they have catalysts that can probably grab market attention almost regardless of where the metal price is. And that becomes very difficult. But if you find a company in that spectrum, then I suggest, and you've done your work and you're confident, then you put your money where your mouth is and you go you go as big as it suits you. But that's what has done me so well in the past. And that's the process that I'm moving forward with.
Well, Brian, another thing that I think you utilize, and a lot of us utilize it, is the network of people that you meet in the industry that you can count on for good advice. And you mentioned just in that Abra Silver comment that the Altius team, and I know that you found a number of deals by talking to the Altius team, and we should, I guess, mention the fact that you also just put out a field notes conversation with Brian Dalton, the CEO of Altius Minerals, up on your new site, the Field Notes, and it's where you're doing these deep dives with people. But you just speak to the power of the network and how many times in speaking to that team, you found out about other deals. And this is true with other management teams too, but you find out through the grapevine about interesting ideas because of people whose opinion you respect.
Absolutely, Shad. I would say 90%, 85% of my portfolio is based off the network effect. So meaning it's based off people that I know, respect, maybe are a mentor. And that's how I get introduced to deals, and it goes so on like that. There's very few deals that come from outside, from unknown sources or management teams that I don't know at all. And I try to keep it that way. Altius in particular, long relationship, long-term shareholder in the company. I think they're arguably the best run junior, they're not even really a junior, they're $1 billion market cap, best run company. And it's one of those stories that's gone from prospect generator to the pinnacle of the royalty market. And that's what I think everybody wants to see in terms of success of a junior, is that sort of path. And I think they're extraordinarily run. Like you said, I was just there filming episode 3 for my Field Notes series. Spent 4 days in between St. John's and then central Newfoundland. 2 days in central were with Lawrence and Chad, taking a look at a few of their prospective properties that they're looking to JV. And then the other 2 days were spent in St. John's with Brian Dalton, with the rest of the team, and did the interview with him, the conversation with him, covering all things Altius, all things sort of base metal focused, but even the resource sector in general. And it was quite fun. And you'll see in the upcoming episode, we did a seal. It was a seal barbecue. They cooked a seal, we ate it, and had a party in Brian Dalton's house. And that was a phenomenal time. And we've captured all of that in the episode, which is not only a focus on Altius Minerals, but also, to me, is the blueprint of investing in a prospect generator business model or company. And that's something, as we've talked about in previous episodes, where it was a big part of my exploration investment is in prospect generators. I believe in the business model, and I believe I've got a couple of prospect generators in the portfolio that are going to follow that exact same path of Altius and become those billion-dollar companies, billion-dollar cash flowing companies in the foreseeable future. And so Field Notes is me taking you to site with me to see that and see the other parts of these management teams on a more fun level, not just the formal in front of a podium or an interview.
All right. Well, I'll also post the link to the Field Notes video in the show notes here so everyone can stay up to date and watch that updated video. Brian, thank you as always for your time. It's always interesting to hear the way you manage your portfolio because honestly, you might be one of the most selective people that we bring on the show when it comes to different stocks. And I think you need to be in these markets, especially in a time like this where there are gains to be had, but it clearly is a bifurcated market where some stocks are truly outperforming the broad sector. Brian, thank you for your time. We'll chat again next month.
Thanks.